Hey, welcome everyone. It's Clint Coons here with Anderson Business Advisors. And in this video, what I'm going to be doing is replaying an event that Saad and I did together to his clients at Baselane. And if you're not familiar with Baselane, it solves one of the major pain points that people experience who use LLCs, and that is setting up bank accounts. Listen, I've got a lot of videos on my channel talking about banking and how you should run money to make sure you protect the status of your limited liability company. So before we get into the video itself that we did, where we covered a lot of material on asset protection planning and strategizing, I'd like to have Saad, why don't you tell everyone a little bit about Baselane and what they can do for real estate investors?
Thanks, Clint. Baselane is an all-in-one financial and banking platform. It's designed for real estate investors, and we only serve real estate investors. It's got banking, automated bookkeeping, and online rent collection built in. Really, the entire goal of Baselane is to give you clarity of mind, give you that time back to be able to invest in growth by giving you banking that's built from the ground up for your real estate business. If you have multiple entity structures, we can open up bank accounts in minutes. We can automate all the money movement so things are happening the right way. We can help you with the bookkeeping and the financial reporting. And again, we can also help you with online rent collection. So all of that is packaged in one. We heard landlords talking all the time about, hey, I've got multiple logins. I'm mixing my personal funds with my business funds. We don't want to do any of that. As Clint's been coaching, we want to have the right structures and the right cash flowing through those structures with different bank accounts, and Baselane can automate all of that for you.
Yeah, so in this event, what I'm going to be doing is teaching you about that. He and I will be talking about the importance of where the bank accounts fit in the bookkeeping, but also about the very structures and the issues that come up when people are getting started in real estate investing. So if you've been investing for a while, you're just getting started, you're going to want to see what we talked about on this critical webinar. All right, guys, let's get started.
Hey, everybody, welcome to another webinar from Baselane. I'm very, very excited. Today, we've got a very special guest here who's going to be educating all of us about a really important topic on entity formation and asset protection. So if you're thinking about growth and scaling, how do you structure your business the right way as you evolve and grow over time? This is our agenda. We're going to talk about a few key topics: why most investors are not getting this entity structure the right way, how to do the right approach and framework to be able to protect yourself and organize your business the best way possible, some scenarios and things like that, and what to do next. And then we'll do a live Q&A after. So we'll do about 35 minutes in the first, four things, and then we'll give some 10, 15 minutes for Q&A. So yeah, welcome in. Please fill out the poll as we're getting started. So while we're doing that, I'm going to do some quick intros here. So I'm Saad Dar. I lead partnerships and sales at Baselane. I'm also a real estate investor. I'm a former CPA. I invest in mostly long-term, but I have a mix of some small short-term and mid-term rentals. Our guest here today is Clint Coons, who we met over about a year ago. Clint is an attorney, an investor, a best-selling author. He's also a large real estate investor in our world, 365 plus units, which is very impressive. He is co-founder of Anderson Advisors, which I'm sure many of you have heard about if you're working with Baselane. And he is a specialist on this topic in terms of asset protection, business planning, tax strategy as well. And so he's going to be walking us through these things today. So super, super lucky to have Clint here. Clint, welcome.
Hey, thanks for having me. Appreciate it. Looking forward to getting into the material.
Yeah, we're super excited to have you. And I'm just checking to see how we're doing on our poll and if everybody's filling out the poll. And for the team, if you could let me know when it's done, we'll kind of pull up the results and share with everybody. It's asking you questions like how many properties do you have? What's your strategy, etc. So we know, who you are, so we can tailor the discussion to you so you get the most out of this. And let me just see here. So yeah, we've got a couple of questions. How many rentals do you have? What's your current type of investment property? How do you manage your finances? How do you collect rent? What's your biggest operational challenge, etc. So please fill that out. And our team, if you could just let us know when that's done. So this is awesome. We've got over 125 people on. Amazing. Probably one of the more popular webinars that we've done this year. so I'm not surprised. And Clint, I think we can just kind of jump into it. Maybe you can give a little bit of background, your story. Oh, the poll just came in, so let me just cover that. So quickly, what do we have here? So we've got quite a good mix of folks in terms of size. So 0 to 2 units, 45% of people. 3 to 5 units, 28% of people. 6 to 10, 9%. 11 to 25, 12% of folks here. And then 26 plus units, 6%. The vast majority of your long-term rentals, then the next category is short-term, and then the rest, kind of a blend of a few percentage points for the rest, midterm, et cetera. How do you manage your finances? 20% are on spreadsheets, 20% on some sort of software, 8% have accountant bookkeeper, 18% of you have separate bank accounts. That's too low. We're gonna have to talk about that today. How do you currently collect rent? We also see a lot of different answers here. So 8% on cash and check, 27% on payment apps like Zelle, Venmo. We don't love that. We'll talk about that another time, but you can check out some content about that. Property managers, 33%. Online rent collection platforms, 27%. Baselane, 4%. So if you don't know, we also do help you with rent collection at Baselane. We can automate that for you. So we should talk about that. What's your biggest operational challenge right now? Different types of answers here, kind of a mix, but 38% say tax prep and bookkeeping. And so I think we can definitely help you with that at Baselane. I think the way you set up your business and your structure is also going to inform all of that too. So I appreciate everybody's very, quick responses to the poll here. And we're gonna, jump into the content. So just really quickly, what is Baselane for the people that are new to Baselane, never heard about Baselane, or wondering, what we can offer? Baselane is the leading banking and bookkeeping platform for real estate investors in the U.S. So we offer a few key products. Banking built for real estate investors like you and me and Clint, automated bookkeeping, reporting, and tax center that helps you with all of those things that we just talked about above, and then automated online rent collection. So those are 3 core products. It helps you bring all of it together, automate it for you, so you can really organize, automate, and optimize your rental finances and focus on growth and scaling, which I think all of us want to achieve. So that's a quick blurb about Baselane. And we're going to come back to this at the end. Give you that was just a sneak preview on the offering. Will allow you to sign up for some special trainings that we're going to be offering at the end of this. And so I'll come back to that. But I think we want to get into the conversation. And Clint, I think I'll just try to ask some questions on behalf of the investors here. I'll let you know I have one LLC for about 9 properties, and there's one that's not in the LLC and then 8 that are. Okay, so I might be one of your subjects here today as well. And so I guess the first question is really just around, I see this on Bigger Pockets, like, why should I have an LLC versus just having it on my name? Because I get cheaper rates on my loans and things like that. How should we be thinking about that first question?
Yeah, it's a great question. It comes up all the time. And you're right. I've seen it a lot on Bigger Pockets. I used to write for Bigger Pockets when Josh started it. I don't know how many years ago, 15, 17 years ago. And that was always a topic of conversation from a lot of people. Having grown up in a real estate investor family and seeing the challenges that people have to navigate when it comes to owning property the right way to reduce the risk of litigation, and also seeing what happens when you do get sued and what your options are. Do you make a claim to your carrier to cover you, and you hope that they're going to cover you, or you're just sitting back, cross your fingers, trying to settle it out because you don't want to make a claim because then you're going to get dropped, which my father tended to do more often than not when it came to dealing with his friction in his rental portfolio.
Right.
But what I tell people is this, all right, so you take your insurance, and everyone has a false sense of security with an insurance. And here's a great example that came out of a recent case. And what happened here is that an individual this is in California, they were being sued by someone who was injured on their property. All right, so somebody was injured on the property. They're now starting a lawsuit, and that is their tenant. And the tenant in the lawsuit itself, They claim that the landlord did not keep the property up to code and didn't provide habitable living conditions. They throw all this extra language into the claims because of what they intend to do with their claim or with their pleadings is to assassinate your character. Yeah, you were injured on the property, but you know what? This is a slum landlord as well. So I just want the court to take notice. You don't want to protect this person, right? We want to go after them and hold them personally liable and get all kinds of damages. So what happened with this landlord in California is that they turned the claim over to their carrier, and their carrier then looked at the complaint, sent back a letter and stated, "You're not covered." And of course, the landlord's like, "What do you mean? This is why I bought the insurance. It's for this type of slip and fall." They said, "Yeah, normally that would be covered, and you're correct. But as you'll notice in your complaint that the landlord or the plaintiff's attorney also pled that you violated the warranty of habitability by the way you maintained your property." And he said, "No, that's not true." Doesn't matter. You see, in your policy itself, it states that if they make that type of claim, you're not covered. Now, how did I find out about this? Because, of course, the landlord sued his carrier and the landlord lost because it went up to the appellate court. And the appellate court held in the favor of the carrier because that was inside of his policy. And so when people tell me, "Hey, you know what, I'm just going to load up on insurance and it's going to be there to protect me." I mean, we could spend probably the next 40 minutes and I could just keep citing case after case after case where that is just not the facts, that carriers find ways to get out of coverage. And so when it comes to asset protection, you need insurance. It's your backstop, but it's not how you should protect yourself. And what I like to remind people, many times you don't get sued for what you did, you get sued for what you have. And the more of it people can discover that as plaintiff's attorney that you have in your own name, the more likely it is that they're going to be aggressive in pursuing the claim.
Yeah, that's super helpful. So I think that's just kind of recapping it, the benefits of that. Obviously, main one is the liability protection, as you just highlighted. Um, and then it also sounds like the second thing you just said, which is super important, is separation of, I guess, personal and business assets, right? So you're protected, meaning if there is something exposed, it's business only, for example, versus all of your assets. Is that right?
Correct. Yeah. So do you mind if I draw this one out?
Yeah, please.
Okay, let me just share some screen. We'll draw some examples of what I'm referring to. Okay, so think about if we had two investors here. We have this investor, all right, and they set up one limited liability company and they place 4 homes into this one LLC like that. Now, and we contrast that to this investor over here who takes an approach where they create 4 separate LLCs, and each LLC has its own home. Now, this question comes up a lot, and I think you're alluding to it as well, is that when you're starting out, investor one right here is a pretty common scenario. You start buying a property, then you go out and you buy another property and another, and you just start dropping them in the same LLC. And maybe you talk to someone and they say, "Listen, you can put 4 or 5 properties in there. Just make sure you have this we just talked about," right? All right, and then you're going to be covered. Now, when I started back in 99, when we started Anderson, and I would teach or speak to real estate investors, and this was before I started investing, I would teach people this strategy right here. I would say, "Hey, you know what? Take and put 4 properties in there, no more than $500,000 in equity per limited liability company." Because what I was focused on was if a lawsuit were to originate from this property right here, then what's going to happen is they're going to name the LLC as the defendant in the lawsuit, and they're going to sue the LLC. Now, of course, you have insurance, but let's say the insurance doesn't cover the claim because of what I just described. And that landlord that I just described, he had other assets. So now all those assets are exposed to the claim of the injured party, to that tenant. So when you're thinking about this, what I was teaching at the time is, hey, if they sue your LLC, the most you'll end up losing is going to be the equity in your property because that's all you have, right? The bank gets paid first, you get whatever's left. So if your risk tolerance level sits at 500K, then do not put more than $500,000 worth of equity into that limited liability company. Now, what I started to recognize when I started investing, I remember this was in Shelby, Tennessee, Memphis, Tennessee, Shelby County, very first property I bought back in 2005 or 2006. 2006. I bought this property. I received my first rent check after debt and everything else. It was $217.26. And I looked at that and it struck me, right? I didn't have a lot of equity in this property, maybe about $40,000, but it struck me that that rent check, being it was only $217, that was what was going to become my retirement. That the more of those that I keep acquiring, then I'm going to be able to retire and live a lifestyle that I want based upon that rental income. And see, so for me, that was a change in my thinking because I look back at this investor number one and I said, all right, so you're involved in a lawsuit, you lose $500,000 in equity, but that isn't what hurts you. What hurts you is the fact that you have each of these properties. This one's throwing off 8,000. This one's bringing in 10,000. This one's bringing in 6,000. Maybe this one's bringing in $14,000 a year. In my example right here, you just lost, what's that? $38,000 in income. That's what hurts because see, the mistake that I think a lot of us originally start thinking about is, hey, the equity in the property, but you don't eat your equity. You don't go to Costco and say, hey, can I pay for my groceries with the equity in my property? No, they're not accepting that. What you're paying for is with the income. And so there's the mistake that I see people make when they're grouping properties in an LLC. They're not recognizing you're not trying to protect equity. What you're trying to protect is income because income equals lifestyle, and lifestyle then is freedom for you to do what you want to do. And so that income is so important. That's why when we create one LLC per property, we could take a hit in our portfolio right here. And maybe here is, in this property is $125,000 in equity. And yeah, that sucks. And I lost that. But what did I keep? I kept the $8,000 from this property. I kept the $10,000 from this property, and I kept the $14,000. So I still have income coming in. My lifestyle will be impacted, but it's not going to have the same impact that it would if I lost all of that.
Not a total loss.
Yes, and this is why I recommend people do not group properties. And I get it. The likelihood of being sued, is pretty small. In my investing, which started in 2006, I've only dealt with 2 lawsuits. Now, the lawsuit that I'm in right now, okay, and this is what I'm talking about, why asset protection is so important. Winston-Salem, North Carolina, I do a lot of investing there. One of the properties burned down last year. And I actually, at my events, I play the video from the local news station that went out there because this house went up in flame. It burned down to basically to the ground. And unfortunately, the tenant expired, passed away. Now, he didn't die in the fire. He died several weeks later, but he was taken to the hospital, smoke inhalation, and he had a lot of health issues. But unfortunately, he passed away, and it's sad that it happened. Why did that fire occur? Because the tenant, they determined, had a power strip, and there was too many things plugged into it, and that's what started the fire, a defective power strip that he had. They traced it back to that location. Now, that doesn't stop me from being sued and having to defend this case. And so, lawsuits do happen. And again, we could spend several hours talking about those people that have run up against. And so by putting this together, what you're doing, it's prevention, right? I'm creating security around my investments because I just got off the phone with a client. She's engaged in 2 1031 exchanges right now. And she said, all right, Clint, where are you investing right now? I want to know where I should be looking to roll these funds that are going to come in. And I said, honestly, I'm struggling to find new investments. I have not made a single investment this year because it's becoming a very difficult market, okay, for investment purposes. And so when you think about the assets that you have, if you have worked on, you've brought in, as we saw there in the polls, a lot of people have between 0 to 2 and then 3 to 5 properties. How easy is it to go out there and just replace that portfolio tomorrow if you had to start over? It's not.
Extremely difficult.
Extremely.
Yeah.
That's why I push.
That's helpful. So maybe a couple of questions, I guess. So we do have a lot of folks here that are under 5 properties at the moment. So just taking that into account, we've talked about the dangers of grouping, let's say 4 or 5 into one LLC. And so what are the different types of structures um, or are you seeing any other common mistakes related to that before we get into that? Are there other types of kind of things you see that we should avoid, I guess, before we get into what's the right structure?
Okay, so when you're structuring, the first thing you want to look at, let's say I had a piece of property here and I want to transfer this into a limited liability company. All
Okay.
right, so I would want to know, one thing is, where is that asset located? You see, one of the mistakes that people make is they think that everything is a one size fits all. If you go on Bigger Pockets and if you search Reddit and you talk about asset protection and real estate, you'll see everyone pumping, hey, set up an LLC. In
Right.
fact, at the event where you and I first met, before you came up and we started chatting
Yeah.
about the benefits that Baselane could offer even Anderson's clients for bank formations, which just, as I stated, opened my eyes uh, and really helped a lot of people. The individual I was speaking to was telling me that he set up 2 LLCs. He has 2 properties in Florida, 2 rental properties. And he contacted this group on the internet and he created 2 limited liability companies for these Florida properties. And both of these LLCs are Florida LLCs. And he said to me he's going to deed the properties in. And he said, can you guys assist with this? And I said, yeah, we can assist with the deeds, but I don't think you want to do that. And he said, no, I definitely want to do that. And I said, okay, let me ask you a question. Do they have debt on the property? Okay, and the answer to that was yes, they do have debt on the property. Okay, so then my question, I told him, hey, since these properties in Florida, you understand that when you transfer debt encumbered property into a limited liability company, that's going to result in a transfer tax.
Mm.
Okay, so there's going to be a transfer tax there. And he did not know that. I said, well, do you want to pay that based upon what your properties? That's going to probably run you about $3,800 to
Yeah.
transfer those properties in. Now, the way he'd created these limited liability companies and the way, I mean, to move them into the LLCs, I asked him, how long have you owned the properties? This one he's owned for about 6 years, and maybe this one was 8 years, 8 or 10 years. I
Mm.
said, okay, Florida has a tax cap, meaning your property taxes can only go up 10% a year maximum. Has your property values exceeded that? He said, oh, absolutely. Over the past, 5, 6 years, they've really run up in value. I said, okay, so then your tax cap, okay, you're going to lose it, gone, as soon as you transfer your property into the LLC. So
Ah.
now your property taxes are going to jump on you.
Is
Now
that
you
because
also,
they, sorry,
what's that?
is that because they redo the appraisal?
Yes, they do in Florida.
Okay.
And Florida is not unlike, there's other jurisdictions that will do this as well. And so then we talked about the fact that they have a mortgage on it. And I said, who owns your mortgage? He goes, well, I don't know who owns my mortgage. And I said, well, here's something that's really simple. So everyone that's watching this right now, pay attention here. Before you move property into an LLC, the first thing you want to do is go to or Google Freddie loan lookup tool and then Google Fannie loan lookup tool. Use 2 separate browsers. It's going to take you to a web page. And on that web page, you can type in your property address and the last 4 digits of your social security number. And then the site will tell you whether or not Freddie, or if you're using Fannie's, they own your mortgage. Now that's key,
Mm.
because if they don't own your mortgage and you deed property into an LLC, then the lender that you originally worked with, they haven't sold your mortgage to either one of these companies yet. The lender could accelerate. And so when I was talking to this gentleman, I said, hey, what's your interest rate on the properties? Oh, he said it's about 4.75. It was low interest rate. And I said, so look them up right now. This one was owned by Freddie. This one was not. And I said, if you transfer this property into an LLC, then there's a likelihood that the lender is going to force you to refi if they discover that transfer. So
Mm.
on 3 counts, you've got serious issues here. So then he asked me, well, what should I have done? I said, you need to use the right entity for the right jurisdiction where the property is located. And in Florida, an LLC is not what we use. We use a different tool. It's called a land trust.
Mm.
So my point in sharing this with everyone here is that understand that it doesn't matter where you live, although that is important as well when it comes to structuring. What we look at is where is the asset located? Because I find a lot of our clients that we structure and we work with continually, they invest in multiple states. I invest in 5 different states.
Mhm.
Okay. And so the majority of my assets are outside the state of Washington, where this office is located. I have 3 properties here in my portfolio. Everything else is somewhere else. So when you're structuring, you want to make sure you're aligning the structure to the state when you know about these types of issues. And that's one of the biggest mistakes I see with investors. They always believe the LLC is the first entity they need to set up. And I say, hey, take a pause. Let's see. Yeah, you're going to need it, but let's see how it fits in.
Yeah, that's super helpful. So just maybe recapping, and by the way, I did paste that Freddie Mac link as an example that
Perfect.
Clint just mentioned for loan lookup in the chat. You can do the same for Fannie. Just change it to Fannie and look it up, and you'll be able to find it. So just to make sure I'm getting this right, and for the audience here, so not every situation is copy and paste. Like there is a lot of nuances to the individual situations that you might be in. The state really matters. The situation of your current properties, if you don't have the LLC and now you're trying to get them into an LLC, matters, right? And all the things you mentioned, the debt structure, the tax situation in the county or the town that you're in, it matters. And there's cost to all of those things as well. So you're saying not necessarily LLC, there are other ways to do this, such as land trust, depending on the situation. Is that a good recap?
Yeah, that's a great recap. It really depends on your situation on how we want to structure it. And that's why I said earlier, everyone's situation, it's not a one size fits all.
Yeah, that's helpful. There were some people already asking about land trusts
Mhm.
in the Q&A, which is great.
Hey guys, you've been watching this video thus far. We've got a lot of nuggets we've been sharing with you. Listen, if you want to learn more about Baselane, check out the QR code right now. You can go to the website. They've got a tremendous amount of offerings for you that will help you set up your bank account, your bookkeeping to make sure you're running your business the right way. I'm all about asset protection. Saad's all about making sure you run it the right way as well, because the last thing you want to have is a situation where someone pierces your corporate veil because you screwed up somewhere along the way. All right, let's get back to the video.
Great. And so maybe just before we get into like more details, there's so many people on Baselane that we know of that are all growth minded. They all have a couple of properties, as you can see. I don't know what their situations are in terms of LLC today or corporate structures, and they all want to grow. And so if they're going, beyond that 5 property mark, and your box had said, hey, depending on your risk level, probably 4 is a cap, or maybe 5 and 1, or maximum maybe. How do you recommend people think about growth? Should they start creating different entity structures for each property they buy from that they're on? Or do people still do like 3 to 4 and 1 and then do another batch and another batch? Like, how would we think about that part?
Okay, so first off, you have to determine how you're going to acquire the real estate. Is it going to be a DSCR loan,
Hmm.
which would allow you to close in an entity? And if you're new, doubtful you're going to qualify for a DSCR loan if you haven't been investing for a while. So if you're just getting started, you have maybe 1 or 2 properties, you're going to get a conventional mortgage, then what does that mean? That means I have to take title in my own name, all right? Because it's the only way I can do it. They're not going to allow me to take title in an entity unless, as I stated, it's a DSCR loan. Now, here's another nugget you
Hmm.
should pay attention to. In my experience, what I did a long time ago when I started investing is I established a relationship with some community banks in the community in which I was investing.
Hmm.
Now, why did I go down and start working with these community lenders? Well, sometimes they had better rates, not all the time, but they offered more favorable terms from the standpoint is that as an investor, I want to close in an LLC. And if the community bank is going to treat that loan, which they typically do as a portfolio loan, so they're holding it, they're not selling it,
Right.
they'll allow you to close in an LLC. You see, there's only one reason why conventional lenders do not allow you to close in an LLC is because for Freddie Fannie guidelines for underwriting, you have to close in your own name on residential property. But Freddie Fannie allows you, once you close, to transfer it into an LLC if they own the mortgage, but
Right.
we're closed. So community banks aren't under that pressure. So from that standpoint, work with them if you want to close directly in an LLC. If you're obtaining loans, keep that option open. So generally speaking, you close in your own name. That is the first thing that happens. And then once you've closed up on that property, then the question becomes, how do I get that property into this LLC without creating the issues that I just described? Tax issues, transfer tax, debt issues, acceleration. So when I look at that, sometimes it involves setting up a structure where we set up a land trust up here.
Mm.
And instead of going directly to the LLC, we move it into a land trust that is owned by the limited liability company. And we have to have it owned by the LLC for asset protection purposes, because outside the state of Florida, if I didn't have this LLC and instead the land trust was set up and it went right back to me, if something went wrong with that property, or if I get sued, that property could be taken and they can sue me personally. So the LLC is a critical piece here with the land trust. It needs to be the beneficiary. And so in this manner, what you're solving for is the lender concerns about the due on sale clause, about the transfer tax issues that can come up in moving property. So you would use this as the way to create your asset protection. Now, even though I put this on the board here, understand it's state specific. If this was in Pennsylvania, okay, in fact, the gentleman I was talking about, when I asked him, I said, where else are you investing? He said, Pennsylvania. I said, you just picked the hardest states to invest in when it comes to structuring. Pennsylvania, this doesn't even work. I said, so everything I told you, just forget about it. You can't, unless you want to pay a lot of money to transfer the real estate. So again, you have to understand where you're investing. And then what I like to do is I have a base structure here. I always stick everything through a Wyoming LLC.
Mm.
So all my companies that own all my real estate all flow through one LLC. And there's a couple compelling reasons to do this. Number one is anonymity.
Mm.
Okay. So what do I mean by that? The example I've been using for the past half a year, Bill Belichick, right? He's dating a teenager named Jordan Hudson. Okay. I mean, there's just some 40 or 50-year age difference between them.
Oh, wow.
You haven't seen it?
I think I know about it, but I didn't know how young she was. Yeah.
Maybe she's in her early 20s. I don't know, but it's just kind of creepy personally. But anyways, so somebody wanted to do a hit piece on her, right? Why does a 20-some-year-old go for a 70-year-old guy? Well, typically it's this, right? We all know that. So how do you prove that? Well, what they did is they went out and they went to a website, presumably called opencorporates.com, because I did the same thing after I read the article. And they put in her name, Jordan Hudson. Said, hey, why do you go to that site and put in Jordan Hudson? Because you wanted to discover how many LLCs are in her name, where she's listed as the member or manager, or even Bill, if he's on there.
Mm-hmm.
And what they did is they searched these LLCs and they found she was on 24 limited liability companies, which was interesting because they were all set up after she started dating Bill.
Mm.
So they found these 24 LLCs. Now, you find the 24 LLCs because when you set up the LLC in Massachusetts, you have to list who the member or manager is. So that's public available information. Anybody can search this and they can determine it. That's how they were able to discover this.
Right.
So once they did that, they said, all right, I've got 24 LLCs. Now I'm going to go to the county records, or you use DataTree, a program or a subscription we have where I can search the United States. And you just put in the LLC name and said, does this LLC own any real estate? And then they started finding properties. And they said, oh, wow, Jordan all of a sudden has become a real estate investor and she's acquiring multi-million-dollar properties in all these LLCs. Now, how does that happen, right? Are you trying to say that she's generating anything? Maybe she is. She just got, big boost in income after she started dating him. But the implication is there. And so the hit piece was done and it made national news in a lot of different places. And so I went and I looked it up, and sure enough, I could find everything. So my point in sharing this with you is, why do people want that information? Is because they were trying to determine, Saad, what are you worth? And
Right.
if I was suing you, and the more information I can find about your assets, then the stronger claim I think I have, because I can shake you down, push on you harder, because you're worth going after, because you have something to collect against. Now, had they come to Anderson, I could have fixed that problem for them. And you could have set up that structure where that hit piece would have never gained traction, because they would have understood the benefit of using a Wyoming or Delaware LLC. Because when you set that company up, that Delaware and Wyoming, they neither state asks for the members or managers of the limited liability company. They don't ask for this information. Therefore, nothing gets put out there. So you start with this company, and then you create your Massachusetts LLC up here. And
Hmm.
when you file in Massachusetts, Massachusetts says, well, who's the man or member? You say the Wyoming
Wow.
LLC,
So
never
this
your
is
own name.
this is what I hear is the parent co, right? The parent
Yes.
company, basically.
We call this
And
parent or holding.
parent or holding. Okay. So basically, I know it's on the bottom, but normally, basically, this is the head honcho. This is the top layer of your
Mhm.
structure where
Mhm.
you have anonymity. And if you, what you're saying is if you create Wyoming, does that mean if you create five different LLCs underneath that and the names are obscure or ABC, 1, 2, 3, there's no way that people can find out who owns the assets inside of those smaller LLCs if they're owned by the Wyoming LLC. Is that right?
That is correct, because when you look at all of these limited liability companies, they have one common owner, this Wyoming LLC. Your name is not associated to any of those limited liability companies.
I see. That means your disgruntled or angry tenant can't Google it and figure out who owns that property or somebody else that's trying to sue you or whatever the scenario is.
Yeah, so it goes back to, really this all, it also helps if you're self-managing. Okay, so
Mm.
when I grew up, my dad self-managed, he still does to this day, big apartment building he had, and he wanted everyone to know he was the guy. So the problem with that is, when you let everyone know you're the owner, when they've
Mm.
got a complaint, who are they complaining to? The owner. And so he's always dealing with these disgruntled tenants. Well, if people didn't know you're the owner, right? Because you have it through an LLC. Let's say this LLC here is set up in Denver. And if somebody wanted to look up who the owner of the property was, and they saw this Denver LLC, 1321 Maine LLC, and it's owned by a Wyoming LLC called No One LLC, they don't
Right.
see you. So I'm out managing the properties, and I'm working with them. I never disclose the fact I'm the owner. I just disclose the fact that I am the
Manager.
manager. Yeah.
Got it.
And so
That's
that's
helpful.
so it's a different dynamic.
One question that's coming up, and which is good, is what's the difference between a land trust and an LLC? Just basic 101.
Sure. So when you set up a land trust here, okay, here's some characteristics of a land trust. Number one, it's referred to as a grantor trust. Okay, so what does a grantor trust mean to me? Okay, with a grantor trust, okay, number one, there's no asset protection
Hmm.
with a grantor trust. Generally speaking, unless it's codified under state law, which Florida has done. But generally speaking, if I set up a land trust to own property in Texas, California, Washington State, New Mexico, it doesn't matter. As I stated earlier, when I put my property in there, then if anything were to happen with the property, the owner of the trust, which we refer to as the beneficiary, is going to be liable. So a
Okay.
grantor trust doesn't offer any asset protection. B, no tax benefits with a grantor trust. It's ignored for tax purposes. So you're not filing any tax returns. Everything passes through to whoever the owner is. You see, with a trust, like a living trust, right, you have a grantor, that's going to be you. You have a trustee. Typically, this is not going to be you. I like to use an LLC here as the trustee. And then you have a beneficiary, and that's the owner. And this would be you followed by your LLC. Okay, so now, why do people use this grantor trust? Because it has no asset protection, no tax benefit. Why would you set it up then?
Right.
For this reason here. Title transfer.
Ah, okay.
Title transfer. Because you run into problems with the due on sale clause. If your mortgage is not owned by Freddie or Fannie and you want to put it directly into an LLC, the lender could accelerate, make you refinance. But if you put it into a trust, they don't do that. Okay, because there's this act called the Garn-St. Germain Act, Federal Depository Act of 19, I think it was 82 or 86. I think it was 82, which basically states if you move property into a grantor trust, lenders can't accelerate. So you use it from that standpoint. So this is what the public sees, the lender would see. They don't see what's behind it, the beneficiaries ultimately an LLC,
Mhm.
because the other benefit of a land trust, it's private, meaning that the document itself, it's not recorded anywhere. No one can look at your trust document and see who the parties to the trust are. All of that is hidden because it doesn't get recorded. The only way somebody knows that a trust even exists is because title to the property is held in the trust name. That's
I
it.
see. So
Yeah.
it still has a title transfer,
Mhm.
but there's no due on sale clause, so they can't accelerate on that, basically.
Correct. There's
Got
no
it.
transfer tax issues when you transfer it in. That we talked about moving into an LLC. Some states impose a transfer tax if you go directly into an LLC, but they don't into a grantor trust.
Okay.
So, yeah. So oftentimes that's what we'll do is we'll set up the trust here. Individual will take their property and they deed it into the trust, which by way of a little asterisk right here, if I want to tell you, if you're not using a professional to do this, and I'd highly recommend you do it, but I know there's a lot of people, especially come from bigger pockets, they like to do things on their own. Never use a quit claim deed. Okay, there's another thing you should write down. Never use a quit claim deed to transfer property. Always use a warranty deed or a grant deed if you're in California. Always use a warranty deed. It's important.
Yeah.
Whenever I see the use of a quit claim deed from an individual to a land trust or to an LLC, even if I don't know, I can't discern that you're somehow involved with that entity, I know you are, because you'll never buy property from someone and accept a quit claim deed on that purchase because you can't get title insurance with that type of deed and you have no guarantees. And so if I'm going to give you $300,000 for a piece of property, I want to guarantee that you're the owner of the property. With a quit claim deed, you're saying, maybe I own it, maybe I don't. Maybe it has warts, maybe it doesn't. You get whatever I have. You take the risk. People don't ever do that. They always want warranty deeds. So that's how you can mess things up and disclose that you're the owner unintentionally.
That's super helpful. We have one more section, and then we're going to get into Q&A for folks. And
Sure.
this is really important because I think there's sort of an element of like, how do you set this up the right way and structure it? And we're going to be sending out a link here soon that Clint had provided that will help you guys with that. If our team can share that. And Clint, what exactly is that link for? Where does that take them?
To set up a strategy session with us where, I mean, so if you want us to look at your individual situation, where you're investing, is it long-term, short-term, mid-term rentals, flipping property? I mean, there's different strategies for different types of investing, buying subject to. We'll break it all down for you in 45 minutes and create a plan for you. And obviously, we'd like you to use us to help set it up, but there's no obligation. What we want to do is we want to make better informed investors out there. Because eventually when people start consuming the content that you and I are putting out and they start understanding how things work, they start making better decisions. And then, they're involved in a lawsuit. They're not putting their entire investment portfolio at risk.
Yeah,
Because we obviously have the same incentive, right? We want to keep investors investing. They open up more accounts, they create more LLCs, and they find financial success.
this to me, folks, is a no-brainer. They're giving you 45-minute free strategy session. All of us should do this. I'm going to do it because I've made that mistake. I have 8 in one LLC right now. And I think after just watching this today, listening to this, I'm going to have to adjust mine as well. We have one more section. I guess, Clint, we want to talk about, operations a bit. The Baselane and banking also comes into that because you had a video that I saw a long time ago about on YouTube about, where things start to get messed up with entity structures, but also the operations of it with banking and the way you set it up and financials and, not having clean books and things like that. So what are the things that you see often that folks are kind of making mistakes around? Let's say they do even set up the structure that you're coaching. What are some common things you're seeing folks not doing correctly that they should be doing correctly?
With their structuring,
With the structuring, the way they set up their bank accounts, for example, things like that, so they don't pierce the corporate veil, et cetera.
so one of the things that you'll see come up a lot is people don't have operating agreements. All they
Mm.
do is they file the LLC and they never put together an operating agreement. Um, that is a huge problem. The other thing, of course, is how they run the money. So let's just draw this out. I see some people say the link's not working.
No, we
Uh,
pasted a new one. I just tested it. The new link is working. Let's pin that for the team on Baselane.
yeah,
Yep.
BL tap 26, right? ABA.link /
Yep.
BL.
I'm on it right now. It's opening up.
Okay,
Yep.
perfect. Now, so here's what happens. I have a structure that looks like this. We're down here, and these LLCs are owned like that. Now, what individuals will do is they'll commingle assets. So let's say I have some CapEx over here with this property. The roof needs some repair work done.
Mhm.
And I have money in this LLC.
Yeah.
People will take money from here and pay it over here and cover the roof expense with this LLC's checking account, assuming they even have an LLC checking account opened up. A lot of
Right.
times they don't have any checking accounts. They have a checking account in their personal name, and then they'll start covering the CapEx and the turns with their personal account. And so what they're electing to do is they're electing to treat their structure as one common enterprise. And they're ignoring the lines of how money flows. And so it's not only spending money. Here's another great example we see a lot. Let's assume that somebody has set up a structure here.
Mhm.
They have a bank account here, they have a bank account here, and they have nothing here or here.
Okay.
Now, this has 20K in it, and they decide, you know what, let's go on a cruise. And the cruise line wants a deposit of $12,000. So they move the money directly out of the LLC into their personal account. Right? It's my money. But you see, it is, but it isn't, right? In order to receive those funds, what you need to do is move the funds from here to here and then from here to here. So you have to follow the lines, is what I always tell people when we draw out their diagrams and we create their structures for them. And they ask me, how do I get money in and out? I said, just follow the lines. As long as there's a line connecting the box to you or a box to a box, that's how money would flow. So if I needed money up here, I would move money into my blue box and then move money into my red box, just like that.
Right.
So, one of the things that attracted me to Baselane when you and I started talking was the ability to simplify this for our investor clients. And
Yeah.
I'll tell you why. Because a lot of people, as I described, do not do what we just told you. They'll set up their Wyoming LLC down here. They'll open a bank account here, and they'll never open a bank account up here in these single member LLCs. And I get it, for a lot of traditional banks, Wells Fargo, Chase, Bank of America, those guys, that's a heavy lift to go in there and say, hey, I need to get a bank account set up for this LLC. Oh, by the way, it's owned by this LLC down here. And they can't wrap their brains around the structure, why you've set it up that way.
Right.
So what happens is most of the time they just run it out of this here. And so all rents get paid here, and then they just take a distribution here.
Yeah.
There you're creating a problem. The ideal structure should be you have a bank account here, you have a bank account here, you have a bank account here. And then you have a separate set of books for each entity that accounts for all of its income and expenses, right? And then all that flows down to here, and then that flows down to you.
And that entity, the blue box, has its own bank account and own books.
It has its own bank account and its own set of books. Now, this blue box can be disregarded. So I saw some questions come up.
Right.
Okay, so all of these red boxes, no tax returns have to be filed for them. They're
Ah,
disregarded for federal tax purposes.
that's very important. Yeah.
Yeah.
But
So
you need
why,
the book to
but you
do it.
still do the books. You have to do the books. The
Right.
reason you have to do the books is because if the LLC was sued, involved in a lawsuit, and they're trying to pierce the veil of that company, you have to show that you treated that entity as a separate business and you respected it. If you choose not to, then you give the opening for a court to say, well, you didn't do it, so why should we now respect it when you need the protection? Big, big mistake there. So that's why you want to have separate books. Plus, if you ever want to get a loan, if you're trying to get a DSCR loan, try to use that LLC, you need books and records. Um, so what I like about Baselane when you first approached me is that it solved one of those major friction points for our clients. It made it simple for them to be able to open up accounts on your platform for their multiple LLCs. Or if they open up a series LLC, you can create all those sub accounts
Yes.
inside of that.
Yes.
And that's where your money would be collected. Now, in some instances, cases, it can become problematic. Of course, everyone's situation is different. You're using a PM, you have a portfolio of 9 properties in Houston, and your PM over here will only give you one wire. Okay. So then what I would tell you is you'd wire it here, but then move the money back to the appropriate entity, do the bookwork, and then pull it back down. And what's so simple is that on your platform, it's easy to do that. And it's not, and so that way everything stays clean. Because one of the things that I found with a lot of our clients is they don't pay attention to the bookkeeping and they don't even know if they're making money off their portfolio,
Yeah.
unfortunately. That's sad. And you don't see where the losses are in your investing business because you're not staying on top of the numbers. The numbers are critical.
Yeah, that's super helpful. So that to me is really important. I meet a lot of folks at conferences where they're not doing most of this. And so we just talked about the benefits, and our team is going to be posting a link as well. We're going to be hosting these financial trainings where you're going to be working with one of our experts who's going to help you think about how to set up these bank accounts. And this is why the partnership with Anderson works so well, because Anderson's helping you structure and to get you, set up the right with the right protection, as well as the structures. And Baselane can then immediately help you open up all of those bank accounts, help with all the kind of accounting and bookkeeping side of it through automation, all in one login. And so the link we're sending you also here, and I'll kind of quickly show it on my screen as we move to Q&A here. Lots of questions. Is that you'll be able to get the benefit of working with our team to be able to set those up for you. And you might be thinking, hey, well, I only have one LLC. I don't need this right now. Or, I need to set up the LLCs. And that's fair, but you can still do what you have today, get that stuff sorted out and cleaned. And so you have the proper books either way. And so if you're scaling and you have more properties, usually folks that are 5+ properties, 7,500 revenue, you should scan the left-hand side here. You'll get a really good training on that. And then on the right, if you're starting out, you only have 0, 1, or 2 properties, scan that, and then you'll be able to go to a different training that'll help you set up the basics. And so I'll keep this live here. I think, again, the link we sent from Clint is super important. That's the structure. And then this will be the banking part of it and the kind of helping you with the automation of the bookkeeping side of it as well. Let me go to the Q&A because there's a lot of questions here. I don't think we're going to be able to cover all of them, but we're going to do our best to honor the order and what makes sense for everybody. We'll cover that. There are some questions. We covered the land trust question already, so I'm going to mark that complete. Florida now has a Series LLC option starting June. Would it be better to start using Series LLC setup to hold properties instead of land trusts?
It's not going to change anything that I was discussing in Florida because if you have the debt and the transfer, all that, even if it's gone into a cell, you're still going to need a land trust most likely.
Yeah, that's helpful. Can you transfer to an LLC for properties located in Texas. I also some questions about people wondering if, well, if it's in your name and then you transfer to an LLC, can somebody just find you through the paper trail of who sold it? Or
So
how do you
I
think?
mean, that's a great question, Saad. It comes up a lot. People will say, well, Clint, if you transfer the property into an LLC, they would see that you're the owner of that property and you transfer it to an LLC. So they assume now that you own it. I mean, you could make that assumption, but there's nothing that leads you to that conclusion other than if you messed up the transfer by using a quit claim deed. That's why I said
Mm.
do not use that deed form.
Yeah. And you said to use the warranty deed.
Warranty deed, yeah.
Warranty, yeah. There's a question about this kind of goes back to the 500K, I think. I invest in vacant lots. Would you consider in one LLC for 3 to 4 parcels under 100K? I guess that sums up to 400K total.
Yeah, see, with vacant land, it's a little different from the standpoint that your liability is typically going to be limited to uh, trespassers and whether or not you've posted the property. So we had one client last year had a vacant lot in a housing development. Some kids were riding motorcycles on it. He knew about it. He didn't post it. Kids got injured. They sued him. He had to deal with that. Or
Mm.
somebody fell out of a hunting blind one time on a piece of property and they sued our client, because again, it wasn't posted. So I'm a little more flexible with land. I would say you could group land because the liability goes considerably down with land that I in with a structured property.
Okay, that's helpful. Amy's asking, if we go to hundreds of properties, does that mean that, you essentially end up with hundreds of LLCs? Or
That's a
how do you vet that?
phenomenal question.
Yeah.
Okay. So as my portfolio scaled, I started grouping properties per LLC. And the
Mhm.
reason why I did that is because once you get beyond 15, 20 LLCs, I feel that you can take on more risk, right? Because assume that you had 300 properties and you had 30 LLCs with 10 properties each, and each LLC generated for you $50,000 a year. That's 1.5 million in rental income.
Right.
If you lost 50 grand because one LLC went down, it's not changing
Not
the type
bad.
of scotch you're drinking or the wines that you buy, right?
Right.
So you're able to absorb it and it's not doesn't have the same impact on your lifestyle. So the when I say one LLC per property, understand as you start scaling, that changes with the dynamic of the income that's coming in. So you're able to take on more risk now because it doesn't have the same impact on your lifestyle.
Yeah, that's helpful. Uh, Chris is asking, can you address how to manage, minimize the aggregate costs of setting up and managing annual fees, taxes, tax prep, filing costs, multiple LLCs for other entity structures or other entity structures? Basically, like if we set up a lot of these, how do
Mhm.
you minimize the setup cost, but I guess also the ongoing, management of this, which he's alluding to
Great
there.
question. So what is your sunk cost going forward, or your annual repeating cost is going to be the state filing fee and your registered agent fee. So you're talking maybe $300 a year.
Right.
What about tax returns? When I was talking about those red boxes, all those red boxes are disregarded. They do not have to file tax returns. So there's no cost there to maintain that structure on an annual basis. I mean, once you set it up, it's there. And so the way I tell people is that when you're investing, look at that as part of your investment, right? It's a deduction, so you can write off the investment that you make to set up your LLC. That's a tax deduction to you. But the more important part is that think of it as an inexpensive form of insurance that unlike your carrier, it's going to backstop anything that comes out of a lawsuit. And hopefully it
Right.
never happens. But there's
Right.
also other benefits that come from an estate planning side. Well, maybe we'll talk about that on the next event about
Yeah.
using types of structuring.
Yeah, that's helpful. I'm going to skip around a bit. Barbara's asking, can the holding LLC parent co write checks for all the LLCs so you don't have to have different checking accounts for each LLC? Which also, I don't think we're recommending that. But what do you think about that, Clint?
Well, I mean, I've taught that before when people were struggling to open up bank accounts for their red boxes and you're dealing with the bank, they want minimum balances and they charge you fees and things of that nature. But once we started our relationship with Baselane, you just eliminated all those concerns that people have. And I always say it's good, better, best, right? Best strategy, one bank account per LLC. That's the best strategy. Okay. A good strategy or a better strategy would be to have a management company collecting it on behalf of everything and then distribute it down. And then
Yeah.
the good strategy is you have it at the holding company. But if you did that, this is where people screw up. They don't have good books and records to account for it all per LLC, and that'll
And
blow up on you.
and maybe it's not clear right now, and that's why I'm encouraging everybody to go to the Baselane links and sign up for those strategy sessions and the trainings here, because we're going to show you that you can open up a bank account for each entity in a few minutes. That's like critical. And then also show you how to connect it, because the banking is inherently doing the auto tagging for your transactions. So you're going to learn all of that in about 45 minutes. So I definitely encourage you guys to go there and sign up now if you haven't done it so far. Again, that's also free, obviously. That's a free training that we're providing. And so just scan those codes. I'm going to ask two more questions. I think we're at time. Let's see here. There's a bunch of questions. I'm trying to see what might be. Why are there no taxes for the child LLCs? This is from Phyllis.
Yeah. So with the red boxes, you set up the red box LLC as a disregarded entity. So you tell the IRS, hey, there's only one owner here. And that one owner is the Wyoming Limited Liability Company. And even that blue box could be disregarded if there's just one owner of it. So it's a tax election that is available to an LLC when there's only one owner. And so you saw my structure, they all flowed down to that one owner. So
Right.
that makes us eligible to set them up as disregarded. And then that blue box, somebody asked, Amy, I think said, should that be an S Corp? For rental real estate, you do not want to have an S corporation involved, generally speaking, as an owner of your investment property, either directly or indirectly through the structures that I described. Flipping's a different story, wholesaling, different story. And we don't have time to go into the tax side of that. But hey, during the strategy session, we also discuss taxation. So we'll walk you through this. So those detailed tax questions you have, we'll explain that through that. Because Anderson, we do both legal and tax here. We do a lot of tax, 15,000 returns this year is what we're going to be doing. So it all goes hand in hand.
Yeah, so we did send the link that Clint has shared again. It's down there. You can schedule that free 45-minute session. So please do that. And then we also encourage you to sign up for the Baselane strategy session, which will help you understand how to set those bank accounts up and how to make the money movement the right way. There's a lot of convenience in that too. So yeah, I think this is it. We went through a lot of content. I'm gonna have to watch the recording myself. Clint, thank you so much again for being a gracious guest and teaching all of us about the different complexities of the entity structures, how to think about the risks, how to think about yourself, and how to set it up the right way, and different options. Obviously, each person is going to have to go through that process to figure out what your right setup is. And so again, please go ahead and get that strategy call. And Clint, thank you so much for being here today.
All right, Saad, we covered a lot there in that presentation. So just to wrap things up for the people that are still with us, what would you want to tell them in closing about what they saw and what they can learn by coming and working with you?
Yeah, and I personally learned a lot too. And I think a few things. One is asset protection is actually way more important than maybe people realize, because they think it's covered by insurance, and it's not in most cases. Two, we really have to spend time and energy thinking about the right structures based on the state you're in, the personal situation, your debt, taxes, all of those things have to be considered, which was kind of eye-opening for me too. I really love the Wyoming LLC idea of protecting everything so people can't find you. I think I'm going to do that myself. And then finally, when it comes down to once you've set up the structure, how do you bank all in one place with the right money movement and protecting your anonymity while not piercing the corporate veil? Baselane can come in there and help you with that part of it, as well as automating your bookkeeping. So those for me were all the key takeaways. So asset protection, right structures, and then Baselane gets you to that like clarity, like, automation that helps you run your business.
Yeah. So guys, hey, check them out. We've been using them here at Anderson. Our clients are using them. They offer tremendous benefits that you're just not going to find at the brick and mortar banks. And as a real estate investor, what I'm about is having the less friction as possible in running my business. So, hey, thanks for doing this. Really appreciate it.
Yeah, my pleasure. Thank you, Clint.